Despite the highly anticipated meeting between Biden and Xi, my next guest says the equity market in China doesn't look good right now due to rising political risk. And instead of investing there, he's finding better opportunities elsewhere. Joining me now is Mark Mobius, president of Mobius Investment Consulting. Mark, it's good to have you here. So not much enthusiasm. You still think there's a lot of political risk?
Yeah, and you can see that in the index. If you look at the China index, it hasn't moved. Look at Tencent, Alibaba, any of these stocks have not really moved at all in anticipation of something happening, something good happening of the meeting. There's so many issues between the two countries. It's not only Taiwan, it's the South China Sea, it's the fentanyl that's being shipped from China. It's so many issues that are negative. So I don't see much happening. And of course, the U.S. is very concerned about having the militaries communicate with each other. But as you know, there's a lot of strife now taking place within the military in China. Xi Jinping has made a number of very critical changes in the rocket forces. So putting this all together, it does not look very good. And what I think is the way to get into China, if you want to be in China, is through Taiwan. Oddly enough, even though you may fear there's going to be some kind of an invasion of Taiwan, because Taiwan and China shipping between each other are lots of goods and services. And if you go into Taiwan, you can then get into China in an indirect way.
But in other words, you'd be bullish both on Taiwanese investments and also those, which maybe most of them, that are heavily geared towards China. So it's not that you're bearish on China's economy, it's just you're a little concerned about investing directly there.
Exactly. Of course, the economy is not doing very well in China, but the government is putting an incredible amount of effort to upgrade the technology, particularly the semiconductor technology. And that's the reason why they need Taiwan. Because as you know, Taiwan is the center of high-end semiconductor production in the world. So that's where the emphasis will be. Of course, the general economy in China is not doing very well, but the tech sector will be a big focus for the government, and a lot of resources will go into that sector.
Does the Chinese reliance on Taiwan make an invasion or a takeover there at some point more or less likely for you than it seems to be for a lot of analysts?
I think less likely. What China wants is a peaceful takeover so that they can take advantage of all the technology that you have in Taiwan. So I just don't see a hot war taking place. Now, of course, accidents can happen, but I just don't see that happening in the near future, at least.
Even a blockade?
Even a blockade, because there's so much trade going on between Taiwan and China. It wouldn't make sense for either of them to have a blockade of some sort.
Interesting. The place that I kind of tease that you're quite bullish on is India. And it's a country that with each passing year, people seem to have higher and higher hopes and expectations for. Can it meet those?
I think so. I'm talking to you today from Bangalore. I've been to 5 cities in India in the last 2 weeks. And you can feel the incredible excitement and incredible potential for growth here. Infrastructure needs a lot of work. And they're building roads, railroads. They're doing a lot of upgrading in the country. And of course, the economic growth rate is very high, one of the highest in the world. So there's still great opportunities. Of course, the stock market has done very well and has performed as well as the U.S. market. As a matter of fact, in some cases, outperformed the U.S. market. But you can see incredible potential here. And as you know, companies like Infosys, ICICI, and others, but we particularly like the medium-sized companies because the potential growth in those companies is very good.